Well, investors remember well when the price of Bitcoin surged to an all-time high near $20,000 at the very end of 2017. Now, a new study from a finance professor at the University of Texas says that the entire price surge can be traced to one whale using the stablecoin Tether on the exchange Bitfinex. Now, an earlier version of this same study came out over a year ago that concluded the price surge was due to Tether, but it had not connected the action to one single whale. That is the part that is new, and Bitfinex and Tether have the same owner, by the way, and are being investigated by the Department of Justice. Now, we are watching the price of Bitcoin right now, and for more on all things crypto, we've got Guy Hirsh, who is the U.S. Managing Director of eToro. Guy, thanks for coming on.
For sure, thank you for having me.
I want to talk about some news with eToro, but let's start with that manipulation report. And a lot of controversy for over a year now about Tether and how traders might allegedly manipulate the price of Bitcoin using Tether. What do you make of all that?
I think it's still in its infancy in terms of understanding how prices work in terms of crypto and Bitcoin specifically. We're definitely looking a close look at that and trying to understand how to not be vulnerable to price manipulation. But the whole, I would say, asset class is still new. It still doesn't have any fundamentals. It doesn't have any kind of core metrics that we can all agree on in terms of price movements and evaluation. So I think it's still early, but this research is really important, and we're definitely taking a look.
And of course, sentiment is so important in this market. And when you see headlines like this about price manipulation, I think probably the problem for the industry is that people who already think Bitcoin is shady and they don't want to touch it, this kind of fuels that belief. Now, you guys have just announced a new feature where you track crypto sentiment on Twitter, which is really interesting. Tell us about that new feature for eToro.
Yeah, so we've launched something called the long-only kind of crypto sentiment portfolio on eToro. And what's really cool about this is that we've partnered with this company called the TIE, and the TIE are digesting 850 million tweets per day using their partner social market analytics, and then they go through a process to distill tweets that are not coming from bots or are not trying to manipulate the conversation. Which
a lot of those tweets are on crypto.
Correct.
Twitter.
So after that process, they remove 90% of the tweets associated with crypto, and they are scoring each individual word in a tweet, and then they score the entire tweet, and then they make it actionable towards a strategy that we have back-tested and saw that it actually beat the benchmark or even Bitcoin in and of itself. So if you had invested in this strategy as of October 2017, by June 2019, that portfolio would have returned 281%. Versus Bitcoin that returned about 150% during that same time period. So we've got convinced that this is real, that there's science behind it. Also, they have been doing these things on equities for years and years now, and have been serving hedge funds, the biggest hedge funds with the same kind of tools and capabilities. And eToro are all about kind of democratizing access to wealth management, democratizing access to the best tools available to hedge funds. And so we were excited to launch this and let people have access to it.
So Guy, what's the kind of use case for a crypto sentiment kind of based exchange? I mean, I'm wondering, based on your kind of the first answer that you had, it's still kind of fluid right now about what the proper way to measure volatility or pricing within crypto assets really should be like. So from that perspective, is this something that you could tweak the algorithm in the future to incorporate maybe more than just tweets? And if so, maybe how would you create that?
So I would say yes. We are definitely looking into advancing and proposing algorithms or algorithmic way to trade this asset class that are based on signals that have been proven to be at least correlated with price movements in crypto. So going back again to equities have decades of understanding how they work and evaluating prices. In crypto, it's still early. We saw that there's a very good indication to the fact that Twitter sentiment or Twitter mentions are correlated or are indicative of price movements of crypto assets. And therefore, we got convinced to list this strategy on the platform. I believe that in the future, we will see more and more capabilities looking at different things. For example, movements in teams, forks, things of that nature, things that are happening around a specific project that help, in a back-tested way, help predict how the price would move of a particular cryptocurrency.
Which, of course, a lot of the tweets have an impact on price, because I would think a lot of the tweets come from people who want to see those coins go up. So they're tweeting, Binance coin because they are invested in Binance coin. But it is a very interesting concept. We got to wrap there. Guy Hirsh, thanks for coming on.
Thank you.
Check back in with you soon. Thank you.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.